is if the homeowner doesn't pay you back with your interest rate, you foreclose and then you take the property, which is why, the worst case scenario could be the most profitable when it comes to this business. So, let's say the closest thing in reality as far as paying the taxes and owning the property would have to be a numbers game, right? And if 95% of the time it redeems, that would mean you'd have to buy 20 tax lien certificates to get one property. So let's go to the viral sensation where it's like, buy the property for paying the taxes of $400. Let's go for the realistic example of that. Let's say you find a $50,000 property or piece of land, or even $100,000. $400 on $100,000 is a little bit low, but let's say $400 on a $50,000 property, whether it's land or whatever. Okay, so you buy 20 of those. Okay, so you're going to be out of pocket about $8,000, and then from there, one out of those 20 will not redeem. Okay, so at this point, you will foreclose on that property. You will send notices to everybody involved, giving them a chance to pay that $400 back, or you're going to foreclose, right? And the beauty of foreclosing with a tax lien is it does wipe out the mortgage because the tax lien is the priority lien, okay? So now, when it comes time to foreclose, you can do it yourself, but generally it's best to hire an attorney. So this is going to cost a little bit of money. It could cost $1,000 to $2,000 to get the attorney to do it. And then from there, when you foreclose, you have to do a quiet title, which could cost maybe another $1,000. So at the end of the day, it's not just going to be $400. It is going to be that $400 plus maybe a year or two subsequent taxes before that. Okay. And the other thing to be clear on is make sure it is the first year tax lien that you're buying, not the second or third, because if you buy the third year, you can't foreclose. It has to be the first year taxes. So, don't buy the second year, buy the first year. So you have the priority to foreclose. And then in that situation, you've taken your $8,000, you have gotten, anywhere between 8 to 36% interest on your, what would we say, $7,500. I think I gave round numbers here. I went with a $400 example. Let's go $7,500. I'm off by $100. But you've gotten, a good interest rate on that. But you've turned that amount of money possibly into $50,000 within 1 or 2 years because of kind of the home run that you're going to get when that tax lien doesn't redeem, okay? Now, the other situation is, yes, there are over-the-counter deeds that you can go and buy, okay, in deed states. So in that situation, you're not paying the person's property taxes. It's already back and owned by the county, okay? So you can buy land and lots for as little as $50, $100 with over-the-counter, but sometimes there will be subsequent years' taxes that are associated with that as well.